following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, folks, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. And what do we got going on today? Well, we're certainly here at the appointed time.
The following takes place between 2 p.m. and 3 p.m.
Well, wasn't that special? Anyway, S&P's up at 9 points. Volume is about almost 400 million shares lighter than yesterday, coming in at 2.17 billion shares as we start the show. So kind of significantly behind it. Of course, it is a Friday. I continue to be reflective as I was yesterday. I hate it when everybody is on one side of the boat as they are right now. Very few people shorting these highs, and it just can it continue to stumble up a little bit? Yeah. My guess, though, is we're kind of getting ready for the FOMC meeting, and we might have just a little pullback into Wednesday. After that goes through, maybe we'll have that kind of rocket Thursday or Friday of next week. But it just seems to me like we need to get either a pullback and have a lot of people short this market so it can go higher, or at least somebody on the opposite side of the fence. Just about nobody thinks this market's going lower. I think one or two things are going to happen. We're going to go sideways, or we're going to go down, and then maybe we can pop. But it's going to take a little bit of back and fill here to get the market going higher. And, of course, an endless procession of people all talking Dow 20,000 makes me think that we also have maybe a cause, time to sit back and reflect a little bit. I don't see a great deal going on out here that would give you a lot of signals. I did buy one stock today. It was the best looking thing I could find in the market. It did exactly what I liked. It took off and went higher on energy, came back on very light energy. It's come back into that segment. But other than that, you can't talk too much about it. Of course, the big news, I think if there was any news out here today, has to be Mr. Dollar. And that we see this cranking along up another 56 cents, pretty much confirming what I think, which is we're going to slowly move up to 105. In the short term, that should put pressure on the market. I suspect that the Treasury and the Fed both want to slow any kind of massive rally down in the market, lest we cause a boom bust. So I think they could put enough logs in front of the road to slow this market down a little bit. But I think they really see this big move in the last week and are thinking, man, we're doing everything to keep a lid on this. We need to get these interest rates up higher sooner rather than later. The question is, I think 98% or 99% thought that we raise interest rates next Wednesday. The only question would be, what is that language after that show? And that is on Wednesday for the FOMC. And that is, do they raise 2, 3, or 4 times next year? And my guess is we're going to get a little bit of indication about that. And that is going to move the market. Until then, nice day, up 9 points in the S&P cash. I suspect this may be the high through Wednesday. So we may just go a little sideways out here and build a little energy to go higher, or hopefully pull back and have a whole lot more energy to go higher. This would be something else. But this whole lack of anybody shorting and the kind of lackluster move in the last couple of days above 2250 makes me think that most of the shorts are out of this market. And that's kind of what's been driving this market is the backs and a lot of people covering their shorts. So we will continue to keep an eye on it. As always, we like to start off the show with a little history.
That it's all just a little bit of history repeating.
On this day in 1906, Grace Murray Hopper is born in New York City. She later serves in the U.S. Navy, rising to the rank of Rear Admiral, and invents the COBOL computer language, if anybody ever learned that. That was I read about it, never had a computer that ran it. I stole my brother's college books, programming for COBOL and what for, and got an interest in it. Microsoft Basic was the first thing I programmed in. And that's when it was, I think, an 8K of memory. Anyway, the computer language is one of the first software programs enabling computers to be used by non-mathematicians. She also invents the term bug for electronic glitch. When in 1945, she opens a malfunctioning computer and captures a moth that had been fluttering around inside of it, causing electrical relays to fail. Anyway, she went on to do a lot of other things, kind of famous for a few other things out here also, and that is a few quotes. She was the one that started, "It's often easier to ask for forgiveness than ask for permission. A ship is in port is safe, but that's not what ships are built for. If you don't manage people, you manage things. You lead people." And she ended up being one of the big people, I'm going to say in the same range as many of the people that came out of England for developing what computers would be, the languages, how they work. And, of course, since the military has a bunch of bucks, for the most part, that's kind of what happened. She died, I think, in 1992. But there are not a lot of women in computerisms, and she was one long before anybody ever thought anything about her. But I read about her very early and often. But I don't know if you can say anything about it other than that. I was going to play the rest of the story, but I can't find it. I know I have it somewhere, and that's the rest of the story. I'll think, I didn't have it there. But, we'll find it eventually. Other things going on. Just saw this. This is the first of a few of these problems I think they're going to pop up. The Dallas Police and Fire Pension Systems Board of Trustees is doing some lump sum withdrawals from the pension fund. Basically, what we're finding out is that a lot of these cities that didn't have any fiscal responsibility. You can point your finger at Chicago, L.A., and New York, not that bad. But a handful of these cities were allowing cops to retire and then brought them back, and these guys are made millionaires. Now there's no money left in these programs because of the drop issue. But just a handful of these pension funds.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And anyway, I just thought this is kind of a heads up. This is one of the first ones to really run into problems, this Dallas Police Fire and Pensions Fund. But we're going to see a great deal. This is probably 10 times the problem in Los Angeles and in Chicago. And just kind of look out there. It's you get every once in a while these pension funds or just all kinds of entities that blow up from time to time. This is the first sign that a lot of these are now starting to run into real trouble. And basically, they had a run on it, and they just basically said no one can take any more money out. It doesn't really solve the problem. Anybody that got their money out is probably feeling pretty good already. Other things going on. We talked about this maybe 2-3 months ago. It is making its way down the line. The SEC has proposed its limit to leverage factors created in these ETFs to 1.5 times of net assets. That's from the 3Xs now. They are going to do a few other things that are basically going to be aimed at bigger funds that might run into trouble, not so much as our individual investors. But I think this may bring a little bit of the volatility down in some of these ETFs. This is now gotten to the point where we might actually see a ruling in the next 2 to 4 weeks on these ETFs that are highly leveraged. So keep an eye out for that. Any kind of change to this could be kind of the equivalent of a margin change in the commodities, and that is that you can have a lot of people on the offsides of that if it was. Anyway, just a few more notes. They're making a few more comments over the last few days on these. The commodity leveraged ETFs may not be touched at all on these. So it's more likely going to be index ETFs, VIX ETFs, anything that does not have commodities behind it. And they would escape those rules because of the way that they're registered with the, I think it's the Act of 1940 or something, that basically separates commodities and equities into two separate pools. They're not really worried apparently that much about 3X commodities, gold and that kind of stuff. They're more worried about semiconductors and some of these others that could have a tremendous effect on the rest of the equity market. What else is we've got out here? After the bell on Monday, we've got Verifone. Not a lot of earnings next week. When we get into Wednesday, Joy Global before the bell. And after the bell on Thursday next week, we have Adobe Systems, Jabil Circuits, and Oracle. So a handful, a little salt and pepper out there on what's happening next week. But for the most part, my guess is we're going to go into that Wednesday for the FOMC meeting. On Thursday after the bell, we're going to get a little juice for Friday, and then probably very quiet from then on through the rest of the year as we get very close to markets that just kind of go sideways on light volume through the rest of the year. A lot with the big moves of the last couple of days. I wanted to see how some of these stocks that were popping up here were doing today on volume. American Airlines had a little pop up to $50.64. Gave a great deal of that back already. AstraZeneca. If I'm not mistaken, this one bounced because they're going to get rid of a ton of people. Volume, not all that exciting. It's given back about half of its move up to $27.42. So not a lot of continuation on these gappers so far. A lot of these kind of small gaps today, not expecting what we've had before. Dynegy, the commodity energy trading company, popped a little bit out here. Much better day, holding much higher. I suspect that's on some of the stuff like natural gas. Express Scripts, after it blew down yesterday, had a nice little gap up, kind of holding that so far, but not a lot of volume. When we look at Coca-Cola, it's getting a new CEO. This one bounced today and has some fairly decent volume. This thing got to 42.22. Didn't give as much back as some of the others. It's back into this congestion line that runs back to the 10th of November. But certainly looks like this gap from about $42.30 to $42.75 going back to the 9th of November. Looks like it's going to get filled in the next day or so. What else do we have? A little pop on biotech today. In fact, let's take a look at that. It did kind of what we were talking about on Wednesday, where it got back down into this gap and reversed fairly nicely yesterday. Gapped up kind of nice, given a great deal of that back. I think you could get back in here one more day. I do like the fact that volume is shrinking, but would like to see this thing probably pull back to like 267 on a couple of light volume going into Wednesday. If the news really isn't very bad, I think you could see some nice short covering into the end of the year on the IBB. A lot of discussions about the Macau-based casinos. Yesterday, there was an article in one of the newspapers in China, and that's what leaked here, basically saying that you'd only be able to take out a certain amount of dollars. Now that newspaper overnight had kind of a little different story in saying that you can still take out the same amount of money, but you got to do it with a much lower limit. So maybe you have to take out money twice on the same day. And the idea, I guess, is what they're saying is they don't want everybody to throw all their cash away at the casinos. But since they didn't think about it the first time, I still suspect what has been going on in Macau for a long time, and that is this has been a way to get cash out of the country. People go and gamble a great deal and then come back, cash it all back in for U.S. dollars and get those dollars out of China's grasp. Some people were pointing to some articles about India coming and confiscating gold for those people that weren't paying their taxes or acting like they weren't making any money. This is kind of along that same vein as how do you work and collect cash. But at the same time, the biggest thing China doesn't want is its cash finding its way out of China and maybe into the United States retail or real estate market, which is the biggest way these guys are moving cash offshore in China these days. They don't care if real estate pulls back 20% in the United States. To them right now, no big deal. They're worried about China and the government of China taking it all and them being left with nothing, or a huge problem over there, mostly because of the way things are going on. Anyway, man, a little gap out here. Didn't really roll. We'll look at WIN when we come back. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We have a email in. You can always email me at path@tfnn.com. It says, Willie, can you tell me what you think about BMY? Is it going higher? Purchased February 17th, 60 calls. Thanks. Here's the problem I have with buying calls where you're going to have probably 15 days where these things do nothing and go sideways. And that is the problem. You get into, well, we're into the 9th. What I would probably do is want to get out of these probably by the 18th and maybe rebuy them around the 29th or 28th or something in the end of the year. The problem is you're just going to have a lot of decay in the premiums, and that's why it's so tough on buying options that go out to anywhere past Christmas right now. I just don't see the impotence to think that there's going to be any big, huge moves from 20th to the 30th. So you got, good 10 days of decay in these. It's not going to be the end of the world, but I don't understand the idea of sitting on those as unless you're hedging another position, you don't want anything else. The decay on those is pretty horrific. Normally, the best thing to do is buy options and be out of options by next Friday, which is expiration. And then if you want to buy options again, the last 2 days of the year, generally the premiums are nothing. So if you want to make a good bet, that's another time to start picking up option positions, because you've had about 8 days of them just decaying. And some people are more than willing to give them away at a discount on those last 2 days. And that's probably what I would be looking at. I like that Bristol Myers popped today. That's probably more of an issue of the sector itself, like the IBB. It's held its move here. Volume's not all that exciting, but I suspect that other than the FOMC day, we've seen kind of the last big volume day. We probably are not going to beat anything, even with the FOMC announcement next week. We're just going to continue to see volume kind of come out of it. So you had a good entry. You're moving up, but I wouldn't be holding this any longer than next Friday, even though it's a February 2017 60 call. So like the pop, I would have taken either today's expiration yesterday, or I would have taken next week's. I just, again, don't see the idea of letting these things rot on the vine for a while after the 16th. So what else do we have going on out here? Oh, we were talking about WIN, WINN, and WIN. Yeah, I kind of gave a great deal of it back. A lot of volume out here. It's doing a little better than it was earlier today. This gap is what we've been talking about. And, maybe in a couple of days, this kind of wears out. The story does. But we'll want to watch it in the next couple of days. I'm not, when you get some bad news and a bad move going into an end of the year like this, it's very tough to get anything really going again until the start of the next year. This is one that if you're either bullish or bearish is another one to look at the 27th, 28th, and 29th and see what's happening in that stock as you go into the new year. Sometimes you can catch some nice moves as everybody gets back to trading the second and third. Actually, it's the third and fourth, right? Because we're off. I think New Year's is on Sunday, and they observe the day off on that Monday. So we come back that Tuesday. MGM, did we already talk about that one? I think we did. A little less, this one is certainly the belle of the ball, although it was tarred and feathered with the same brush yesterday. A little bit better out here today, but this one's in a kind of consistent up move. And other than probably getting shaken out a little bit yesterday, hasn't really made any signal that it's doing worse. So maybe things in Las Vegas are going to get a little bit better. Let's take a look at some other ones. Those are the ones that were gapping up. On the side of gapping down. Oop, got the wrong one out here. Gapping down. Almost all of the stocks, and this pretty much happened because of Draghi yesterday, had our gaps down. Barclays, not a lot of volume on this one to hang your hat on, but they've all gapped down. Credit Suisse, a nice little gap back down on this one. They're kind of gappy to begin with because of ADR business, but not a huge volume move out here. But also Deutsche Bank, almost all of them have made this same kind of three-step process, a gap up and a gap back down. Again, you can't make too much out of these gaps. I do like the fact that this thing's been very gappy at the $17 range. And if you were thinking about finding a floor in Deutsche Bank, where you'd be looking is that probably 1680 mark, where you've got all these different gaps coming in from these different days. The first time this thing gapped through that area was on the 24th of July, or no, 24th of June. And then, of course, this gapped up and through that same price range around $17 on the 6th of December. So those double and triple gaps are now really starting to add up in the marketplaces. Big advancers yesterday. Let's take a look on these. And that had a nice little pop in American Energy Corporation, HUSA, a very low volume stock, by the way. More interesting to me was whether or not you could get some more out of Intrepid Potash, IPI. This thing did get up to 304 today, gave a great deal of it back, but not surprising. What you would want to look on this one is kind of getting back into this gap that it went through. I'm thinking $2.20 might be very interesting on this, and watch it. But it had a giant sign of strength, 220, 210 on that. You may want to set some alarms. NVCN, what do we have out here? Come on. Another penny stock. I'm not going to give much riddance to that. SWC, Stillwater Mining, huge pop in this one today. And we're looking at a significant volume. And it's not a big volume stock out here. But this thing kind of a blast from the past. It used to be a much bigger volume stock. I don't know what's going on with this. But certainly you've got the volume today. This is millions of shares, by the way. I made this thing sound like it had no volume. It's in millions of shares, 31 million shares today. So, you've got a break. You've got a break of the August 2nd high. This thing is gone out here for a while. See how far back. I mean, you got to break a high. So in the next move for SWC is going to be this July 30th high, $19.42, 3 million shares. You got 31 million shares here today. Pretty good looking so far. We'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. We go to Michael in Toronto. How are you doing today, Michael?
Yeah, hi. Thanks for taking my call. In the introduction there, you mentioned some SEC ruling on the triple leveraged ETFs. Could you expand on that for me?
Would you say that again? You dropped out.
Could you expand on that for me? Because apparently the DWTI ceased trading on the 8th yesterday, and it's just trading
right. Those were some of the ones that weren't very active. This is kind of a different story. This is the one that are active but have huge leverage, right?
Yeah, like TZA.
So we've got two different kinds of ETFs. Ones that are based on commodities and the other ones that are based on maybe some kind of index. And we're talking about the ones that have and are indexes or around indexes, mostly NASDAQ and other kind of equities that don't have anything to do with commodities. So they've been talking about this since the beginning of the summer. I think I brought it up in August. I just saw some more publications. Basically, they gave the 30 days for comment. So what I'm figuring is that, that's come and gone. So normally within the next 30 to 45 days, you get some kind of ruling. So any of these stocks, if you're talking about like the TZA, some of these other ones, that would be and could mean that very shortly these things may be limited to 1.5 times the movement instead of 3 times.
So they'll cease trading?
No. Well, it may even have a different name, but they'll have to reconstruct the index because they're either 1, 2, or 3x, right?
Right.
So they'd have to reconstruct it so it was a time and a half. So my guess is that these things may quit trading. There'll be I suspect there will be plenty of time. It won't be everybody getting in and out. But my belief would be that if they do change that, and the top one is, so you'll have a 1x and a 1.5x, and that will be it.
Okay. So, I mean, the way, like, it's not going to be like musical chairs where suddenly the music stops and you're left holding the bag, or like,
no.
SEC will give you an advance warning, like 3 to 4 months?
They'll make a ruling, and they'll say in 45, 90 days or something.
Right? Okay. So I'm underwater on this TZA, and I was just wondering what to do.
Well, I can't. It's hard for me to give you a scenario where this gets any better in the next 15, 20 days. Okay. You may get a little bounce out of it. How bad are you off?
Well, I'm down about $4.
Okay. It's very tough. I mean, the problem I have is even if the market just stays sideways, you're going to continue to burn this off. So one of these things where you kind of have to figure out you're going to go sideways or maybe a little down over the next couple of days in the FOMC meeting. At least that's my belief. So maybe you get a little bit, maybe you get back up to $20 on this stuff. But unless we get some kind of giant surprise out of the FOMC, it just looks to me like this one could decay all the way into the beginning of the year before you have a chance.
You really think so, yeah? Okay,
Yeah,
the same with the LABD and the FAZ.
Yeah, you've got, kind of the same thing that I was talking about with the previous emailer who had his options and is on the right side of them. But what happens after the 16th when all the volume disappears and nothing goes anywhere? Well, options and leveraged ETFs just melt. So the question is, you've got about till the 16th to get out of this thing, most likely, right? So you need to already be thinking that no matter what, I'm going to be out of this thing the 16th, because even if I do well and everything turns my way, the thing's just going to go sideways and melt until the beginning of the year. That's probably 90% of the time, right? So you've got a very narrow window back here to get this thing going your way. And as far, I haven't looked here. Let me look real quick.
Do you think they'll just cease trading, or maybe they'll just take the existing fund and they'll just like convert it into 1.5 times?
No, the 1X will stay. The 1.5 would have to change. They'd have to redo the whole thing. So it will just cease trading, and you'll have some new symbol for a 1.5.
Yeah.
Now there is another scenario that's batted around in some of the things I've read, and that is that they'll make a compromise and just get rid of the 3X and keep the 2X and 1X.
Okay.
But in those comments, so you may have as much as a 1 as a 2X, and then they just leave that. So you may just have the doubles and the singles. But again, that's up to them, and it certainly looks like they're going to try to get at least one of those off. So I imagine that these 3Xs are probably on the chopping block.
Mm-hmm. Yeah, because I know as a DWTI, there's really no way to short oil on the index ETFs now.
Yeah, but again, this won't affect those. So maybe you'll see some more people come in on even more highly leveraged ETFs in the commodities sector. These guys will be looking for more business.
Okay. Yeah, because this TZA and the FAZ, they're basically swaps.
Yeah. Yeah. So again, that's why I mentioned at the beginning of the show. Where are you at in Toronto?
Huh?
What area?
Downtown Toronto.
Okay. So down there on Yonge Street and all the rest, huh?
No, just slightly west of it. Why?
Well, it's been a while there, but I flew up every 2 weeks for 10 years to Toronto in Markham for a meeting. Yeah, so I was up there every 2 weeks for about 10 years. So I got to know Toronto very well. I haven't been up there in a while, 10 years, but it probably hadn't changed that much.
Okay, so you basically think that they may hold the doubles then?
That would be my thought. Normally what they'll do is they'll offer some kind of compromise, right? They'll say, okay, we're going to go to 1.5s, and then everybody will grumble and complain, and they'll go, okay, you can keep the 2s, right?
Oh, so you think maybe Direction may even appeal the ruling and then lobby for the 2s?
Well, that's already happened. They have this 30-day to comment thing, right? So after it came out, and that's come out from what I've read. So they'll say, okay, we had a lot of people complaining they wanted to keep the 3Xs, but we think it's a problem. And we said we wanted to do 1.5s.
Yeah.
So we'll give them a compromise, and we'll just get rid of the 3s and make it easy. So, we're probably going to see that in the first – I think we're probably going to see something like in the first 2 weeks, maybe before the end of the month in January. So just be aware of that. I don't think it would make that much difference early on in the market. But again, that's just something next year that you want to be very aware of.
Yeah. Okay. Just keep us abreast of what's happening, okay? Any updates. Any more updates in the future?
What's that?
Any more future updates on this ruling? I'm much appreciative if you tell your viewers.
Talk about it. Okay. Yeah, it'll be on that. I subscribe to most of the stuff from the different groups out there. I got a little echo here. which is kind of driving me nuts. Anyway, thanks for the call, Michael. You can be like Michael. Give me a call at 877-927-6648.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we got a nice little thing going on out here. I've been reading about this for a while. So the last I saw, I can't find the article, but it was maybe on Monday or Tuesday. But I just thought I'd bring that back up because I saw it pop back up again this week. But just keep an eye on it. As I said, maybe in January. But you want to be well aware of these things going on. Tom's vociferously saying that it will not happen. I just know what I read. I don't know the hearts of the people at the SEC. What else do we have going on out here? Look at a few other stocks. I saw Microsoft was up. And it's broken a little bit higher than the October 25th. $61.37, 35 million shares, 15 million shares up here today. So we are breaking that previous high on lighter volume. And let's see if I have any other emails in here. Anyway, that's up here on lighter volume. Don't see a lot going on up here. It looks like maybe this thing is going to hold that high for the next few days, so we have to do it. I don't think it's bad info. I've read enough of it. I would think we probably would have heard a lot more from other folks. I know you can disagree, but I don't think it's bad info. What else is going on out here? Okay, got a few more emails. Netflix NFLX, going into the last few minutes. Nice little pop out here. And, you got kind of a little ABC that might be setting up with Netflix. They've had some news. I wrote about it in the Tech Insider today. And, you got kind of a nice little bounce out of this thing. Not a lot of volume down. Again, you probably wouldn't think that this thing could move down before the beginning of the year. It kind of got a nice little bounce a couple of days ago when they talked about the way that they were going to do some of the new shows that they're doing next year. They're going to be reality-based shows. So everybody kind of thought that was kind of a nice thing. It got a bounce kind of with the market too, so you don't know if you can separate those two. But I think that people on Wall Street will probably put a few extra shekels in the earnings on that. Reality TV is very inexpensive in comparison to scripted shows, and a lot of what Netflix has done is scripted shows. So we'll see exactly what's going on that. What else do we have out here? Yeah, 110.68 is the previous low on November 14th. I just don't see a lot in this one either. Probably going to be a lot of these that have a lot more to do with the FOMC meeting and maybe everybody trying to read between the tea leaves out here back in that. So Tidewater, this one's coming back into the gap today, but lighter volume. This gap down on, August 10th, did so with 7.8 million shares. Came in here with 2.6 million shares today. So we continue to see, a lot of these coming back into light gaps. That's kind of making me think that we've got maybe a market goes sideways at least for a few days out here. We're going to, we're up 9 points on this. But volume, I'm kind of pulling back from it. Anyway, we'll see you Monday. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.